Hi dear traders! Markets are again in uncertainty assessing possible changes in the Fed's interest rate. On the one hand, the recent macroeconomic reports unveiled a rather stable economic situation in the US. Although the data is not strong, it is not as negative as expected. On the other hand, some FOMC representatives announced their intention to continue the aggressive policy on the key interest rate hike. Now traders are looking forward to Jerome Powell's comments, which will be provided at the Jackson Hole Economic Symposium. In our video review, we are going to find out what events may affect the market situation early next week. At the end of the month, Europe is going to disclose its preliminary estimates on the inflation growth rate. The Statis, Germany's Federal Statistic Office, will be the first one to publish reports. There, the inflation growth is likely to accelerate. In August, the indicator may climb to 7.8% on a yearly basis amid higher energy prices. In particular, the inflation rate will be influenced by gas prices, which have hit a new high after Gazprom's announcement. The company said that it would halt the gas supply for 3 days due to the maintenance. That's why traders may start selling off the euro, supposing that Germany's inflation figures are reflecting the overall inflation situation in the eurozone. Meanwhile, the eurozone is going to publish its inflation data on Wednesday. According to the forecast, the annual inflation growth may reach to a new high by accelerating to 9%. Under such unfavorable economic conditions, the euro has already plunged below the parity level. The fact is reflecting traders' reaction to the ECB's dovish approach. Unlike the Fed and other central banks, the ECB decided to raise the benchmark rate by 50 basis points only in July. However, traders want to see more radical measures taken by the ECB. That's why the euro is likely to decline once again. Also on Wednesday, China will disclose important data on business activity among the largest and big manufacturing enterprises. Last month, business activity unexpectedly dropped, thus causing a slump in commodity markets. This decline was mainly spurred by a rising number of new virus cases in some Chinese cities. The situation was also aggravated by worsening forecasts for the global economy amid a rapid monetary policy tightening, which has a negative influence on demand for Chinese goods. In August, the manufacturing PMI is likely to go on falling. If the pessimistic predictions come true, commodity markets may slump again. As a result, the Australian dollar, which is the currency of China's main supplier of raw materials, may also decline. On Wednesday, traders will also wait for news about Canada's GDP growth rate. In Canada, the GDP is still rising compared to the US. In the second quarter, GDP may advance by 1%. This information is likely to overshadow pressure on the commodity markets caused by the news from China. As a result, the Canadian dollar could become a bit more expensive. Next week, traders will be preparing for the publication of the U.S. labor market reports. The U.S. Labor Department is going to unveil its reports on Friday, whereas on Wednesday, traders will learn about changes in the private sector. Only the recent APD report failed to meet the official labor market data. All the previous figures accurately reflected the overall situation, allowing traders to make predictions about data from the Labor Department. Let us see what will happen this time. We will tackle the issue in our daily reviews on InstaForex TV channel. Subscribe to our channel to keep abreast of the latest macroeconomic events. See you!